Anticipate. Don't improvise. My process is purely logistical, narrowly focused by design. I'm not here to take sides. It's not my place to formulate any opinion. No one who can afford me needs to waste time winning me to some cause. I serve no god or country. I fly no flag. If I'm effective, it's because of one simple fact. I don't give a fuck.
Men and women of culture, gather around your electronic devices. This is the most important transmission this channel has ever put out. Welcome to Market Makers, everybody. Your home for tomorrow's TA today. A lifetime, life-changing, generational wealth-building trading opportunity will be arriving in the next 90 days. You need to watch this transmission. Send this out to your friends and family that are interested in this information because you will only get it here. Guys, we need to talk about what's happening in the marketplace. You've been watching this channel at all the last few years, 100% vindication in my mind, talking about the incoming, impending recession because we just had the SOM rule trigger, which is the 3-month moving average, moving up 50 basis points off the 12-month low. Why is that important? Because it has a 100% success rate of capturing every single recession. Lee, throw up that chart. Bank of America, Merrill Lynch, my alma mater, they came out with this chart. Every single time the SOM rule has triggered, you have already been in a recession. And many of you already know this at home. You see the grocery prices. You see the price of everything. You talk to your neighbors who aren't even involved in the market. I feel like I'm in a recession. Everything costs so much money. I can't afford to do most of the things I want to do. I know people getting laid off, right? That's how many of us feel already. But you are there. Okay, understand the Ponzi in the marketplace is the salesmen want to keep you in the market. As this market corrects, we will bottom, we will go back up, and we will follow that GFC cycle, I believe, for the blow off top. The whole time it declines, they will tell you this is the optimum opportunity to put new money at work. They always say this. In the GFC, the Fed had soft landing as the narrative. The Wall Street had soft landing as a narrative all the way into the summer of 2008. And then with the fall equinox, you had the S&P sell off 57%, bottoming in the spring equinox of 2009. This is going to be an epic move in the marketplace, and nobody on YouTube is talking about it. They understand the long cycle. Anybody who studies charts can understand the long cycle. Well, there's a boom bust cycle. We inflate it, we will deflate, but they don't understand the fractal pattern we are trading to, making the identical top July 16th and then retracing. We are tracking so closely to the GFC. It's actually kind of mind blowing. The same exact Fed funds rate, 5.25%. The same morons at the Fed. You had Powell, you had Bernanke.
I don't know whether they've increased. I think they're low. I think this is, you don't see any reason to think that this economy is either overheating or sharply weakening. That's just not in the data right now. What's in the data right now is an economy that's growing at a solid pace, a labor market that has cooled off, but nonetheless, unemployment is low. You know, the data overall show a strong labor market. So that's really what you see. It's neither an overheating economy nor is it a sharply weakening economy. It's kind of what you would want to see, but of course, the job is never done. You know, we're watching to see, which way the economy heads, and I think if we are to respond to weakness, we're certainly well equipped to do that.
And my prediction, by the way, you saw Fed Chair Powell stumble through that answer. He's going to sound like Ben Bernanke when this thing starts to crumble by spring equinox, by March, April 2025. You're going to see this from Jay Powell that we saw from Ben Bernanke.
We've got many economists, one coming this afternoon from Brookings, who says that there is a recession. Are we in a recession
now?
We
are in a serious slowdown in the economy, which has very significant consequences for the public, and whether it's called a recession or not is of no consequence.
It doesn't matter what you call it. We're in a serious slowdown. You are in a recession. Guys, understand what separates this channel, segregates this channel from many other channels, and upsets a lot of people that watch this channel is I'm focusing on the facts of the market history. You're going to understand what the market typically does. Here's a couple of them. What does the market typically do? When I say typically, I mean every single time in every single recession. The market takes out the low. That means your cycle low for Bitcoin, your cycle low for the S&P. All those lows will be taken out and new lows will be put in. Why? Because it's done it every single time since World War II. Nobody wants to acknowledge that because you have to keep your money in the marketplace. View the money managers on Wall Street as sheep herders. They're herding the sheep. Oh, no. What you want to do now, Bob? Now you want to be defensive. Don't ever take your money out of the market. Now you want to be defensive. Guys, this channel blew up back in 2021 when we started it in the summer of 2021 because we were talking about the 7-year cycle. We were talking about the 7-year cycle. Nobody on YouTube was talking about it. The markets at NASDAQ, Bitcoin, and Russell all peaked in November 2021. The S&P made it to January's 3rd or 4th of 2022, and the 7-year cycle played out. And what happened? You had Bitcoin fall 75%, NASDAQ 38%, S&P 28%. Then that played out, then the market bottom, and we are in that phase where we have the retracement before the blow off top, and nobody's going to understand these movements. So, there's a lot of rules in the marketplace. And again, another rule of the marketplace, what is the average drawdown in a recession? The average drawdown, not even talking about a bubble, we're just talking about a milquetoast recession, is 33% from your cycle high. Anybody telling you that? 33%. That's the average of all 13 recessionary drawdowns going back to World War II is 33%. What's the average bubble drawdown? The average bubble drawdown is 50%. The market gets cut in half. Now, when you start looking at this, especially in recent history is very important because that dynamic of the Fed with its easing, the bailouts. You look at .com, S&P fell perfectly. The Dow theory, 50%. Market gets cut in half. NASDAQ fell 82%. S&P and NASDAQ both fell over 50% in the GFC. You have to understand the dynamics you're up against because this is how you profit in the marketplace. By the way, one other rule that's existed since World War II, you have the SOM rule with the 3-month moving average, but the 1% rule, which I knew about when I first started trading, is when unemployment goes up 1% off its cycle low in a 12-month period, then you are also in a recession. We're at 4.3% right now. When we hit 4.4%, right, 0.1% away, again, another factor that proof of evidence, I guess you could say, that you will already in a recession. And Elizabeth Warren, Pocahontas in the Senate, she knows this. I've played this clip before. Lee, roll that clip.
Since the end of World War II, there have been 12 times in which the unemployment rate has increased by 1 percentage point within 1 year, exactly what you're aiming to do right now. How many of those times did the U.S. economy avoid falling into a recession?
It's not as black and white as it very,
Just
very
looking at the numbers, it actually is pretty black
Alan
and white.
Blinder's written a book on this.
There have been 12 times that we've seen a 1-point increase in the unemployment rate in a year. That's exactly what your Fed report has put out as the projection and the plan based on how you're going to keep raising these interest rates. How many times did the economy fail to fall into a recession after doing that? Out of 12 times.
I think the number is 0.
I think the number is 0. That's exactly right.
Every single time, guys. It's amazing when you watch money managers on TV. They just want to keep you in the marketplace. We talked about Tom Lee's prediction that he made just about 2 weeks ago now. Lee, throw up that screenshot. That he had the Russell, because of the rotationary trade, going up 40% by the end of the summer, actually in a 10-week period. What's happened since Tom Lee made that prediction? The Russell fell 10%. Okay, so now to complete Tom Lee's theory of the market moving to the small caps, the Russell has to go up 50% in 8 weeks. 50% in 8 weeks, greater than a 6% gain every single week to make that prediction. But why? Why does that happen? The Russell is early cycle. If you don't know the cycle you're in, and again, not picking on Tom Lee, but you need to understand the people you follow. Do they understand the cycle? The Russell is beta. When we make these blow off tops, the Russell's going to go up with everything else after this retracement's done. But the Russell is beta. And if your prediction is a soft landing, he has the S&P going to 15,000 by the year 2030, a tripling in the S&P in the next, 5.5 years, he has a tripling. If that's your base case, that's your prediction, then you're going to have outlandish targets, right? This is how you get the Bitcoin 250K targets all through 2021. When people were talking about 250K Bitcoin in 2021, again, this channel blew up in the fall of 21 when Tom Lee said Bitcoin prediction 2022, 250K. That's all over YouTube, bunch of different TA people. My prediction was 10.5. 10.5. And then I shared the trade on YouTube for my short. This is back when Bitcoin was above 60K. And where did we fall to? We fell to 15.5. Okay. So again, understand the cycle. There's been some huge trades on this channel, and this is going to be the biggest trade upcoming in 90 days. Without further ado, Lee, we need to get into the charts and look at this information. So guys, again, be sure to like and subscribe, and let's go ahead and start the show. All right, boys and girls, we're going to jump into the charts. Guys, if you want to trade these Ponzi markets, check out SimpleFX. That link is in the video description. If you live outside the USA, there's no reason you shouldn't be on that exchange. Trade cryptos, equities, commodities, and Forex, and get up to a $5,000 instant Market Makers VIP bonus. Details are in the video description. And guys, if you do live in the US and live in most any country in the world, check out Bitunix to trade all the cryptos with no VPN, no KYC. Great exchange. Link in the video description. Message Lee with any questions. Guys, as I'm sitting here recording this video, I just got an emergency alert message. My area is under hurricane warning. That's supposed to come early next week at some point. So if you don't see an update video after this video for next week, it's probably because I don't have an internet connection. So I got a lot of charts queued up. These are all going to be in the video description. These are going to be so you can select them. There'll be a timeline for them if you're looking for specific things. But let's go ahead and jump into this. I forgot to mention in the monologue, Lee, throw up the unemployment chart. Guys, look at the highlighted red areas. Those are recessions. Those big black waves, that's unemployment. When does unemployment spike? And this is the crux of why Wall Street, the Fed, most people in the media, including YouTube, are always behind the curve, because unemployment spikes during and after the recession, not before. If you're waiting for it to spike before, you're looking at a lagging indicator and you miss the biggest moves in the market. On my screen is a 3-month 10-year yield. This is the recession indicator as discovered by Cam Harvey. It is not the 2s and 10s, everybody. It's the 3-month 10-year yield. Let's go walk through this real quick. I'm not using the camera so you can see the entire screen here, but let's walk through this. The area that the media wants you to focus on, look at the left side of my screen here. This little pink box right here. This is what the media wants you to focus on. This is the mid-90s. When they keep saying, you hear Tom Lee say this, you hear other money managers say this. Well, this is a lot like the mid-90s, Bob. And I think we're just going to, the soft landing, which is, again, the vast majority of Wall Street, soft landing, no problem at all. That's because the 3-month 10-year yield did not invert. It inverted, I think, 0.1 basis point, as you can see there on the screen. This is a weekly chart. Where does the 3-month 10-year yield invert? Every single recession, 100% accuracy for predicting if you're getting a recession or not. Here's .com in the pink line. This is where the yield curve inverted. And the green line is when the market bottomed, okay? Now let's go over some of the things that happened in .com, Y2K bubble. SPX fell 50%. The NDX fell 80%. When did the market bottom? The market bottomed in October 2002. It was about 118 bars, 826 days from the time of the 3-month 10-year inverting to the market bottom. What about the GFC? Again, pink line is when we got inverted, pink line, and then the green line is the market bottom. The GFC, a couple notable things happened in the GFC. SPX fell 57%, gold fell 34%, silver fell 61%, okay? And again, the market bottom March 9th, 2009, S&P 666. Let's go ahead and move forward. This was a 966-day inversion, by the way. From the time of being inverted to the time the market bottoming, 966 days. Let's move over to the current time frame. By the way, we also had a recession in the pandemic, right? World's shortest recession with printing trillions of dollars. But we did have a recession, and the 3-month 10-year yield, again, accurately captured that. Let's look at this. The pandemic, a couple notables. S&P fell 38%. Oil actually went negative, okay? Now we're over in the current market. 3-month 10-year yield inverted back on the 24th, October 2022. Now, this is a guess based on the cardinal points in the market, as well as just the previous inversions. Again, the two previous inversions that we're looking at in these bubble cycles, 966 days, 826 days. And I have this projected out to September 2025 being the market bottom. Again, why? Long-term subs already know the answer why. Fall equinox, right? Pivotal points in the marketplace, guys. When did .com top? March of 2000, spring equinox. When did .com bottom? It bottomed October 2002, fall equinox. When did we have a top in the GFC? Just shortly after the fall equinox in 2007. When did the GFC bottom? The spring equinox 2009. Being that we are in, once again, a bubble cycle, I could foresee this playing out. Could this drift into 2026? Sure. This is just a forecast, an estimate. This would take you out 1,000 days, by the way. Longest inversion of the 3 bubbles. And a couple interesting things about this. You can see the 3-month 10-year yield is nowhere near uninverting, right? Has to get up above the yellow box here to uninvert. Couple interesting things when people say, what about the severity of the recession? I just think it'll be a mild recession. Well, look at the deepest inversion here in the 3-month 10-year. The deepest inversion was the .com bubble, right? Look at this. The GFC didn't even come down to the inversion level of the .com bubble. And that .com bubble took down the NASDAQ 80+%. And then if you come over here, that line is actually your resistance level. This is the strongest and deepest inversion in stock market history. Look at the difference of where you're inverted. Got all the way down here, -1.82, okay? Huge inversion on the 3-month 10-year yield. Again, we've known about these recession indicators as soon as you got inverted. That was your 100% success rate. You're getting a recession. And of course, we knew about this back in 2022. When people say you're perma-bear, you're being permanently bearish, I'm not being permanently bearish. I'm a realist. I know how the market cycle ends every single time. Let's go ahead and move forward. What about the dollar? Dollar's collapsing. Why? Because the Fed's going to be cutting rates, right? Dollar's collapsing, affecting the various currencies. Important to note, we could see this bottom at some point, especially when you have the hard crash after the blow off top. You could see the dollar rise back up and a flee to safety move. Let's check out S&P futures. So this is the GFC cycle. You guys have seen me show this multiple times now. Many similarities with the GFC, including the exact same Fed funds rate, 5.25%, the exact same high, July 16th, 2007. This is when the S&P made its high prior to what? prior to the retracement, what we are doing right now. Again, in the GFC, we retraced 12.5%. Then we had the Fed rate cut September 18th, which is the next scheduled Fed meeting. Again, that day does not happen on the same day every single year. Identical first rate cut in this cycle as we had in the GFC. Identical top, identical Fed funds rate. What do I think is going to happen after this retracement? Just like we did in the GFC, we bottom, we come up with the Fed rate cut, we get our new all-time high, and then you have your trajectory. Remember, you topped over here, guys. You topped in the GFC October 11th, 2007. You did not bottom until March of 2009. The declines can take a long time. The important thing is trade of a lifetime. S&P falls 57%. Okay, let's move forward. S&P futures, modern market, zooming out on a 3-day chart, just looking at our Fibonacci retracement. Where are we bouncing off of, guys? You're bouncing right off the 50% level, 53.42 here in the market, okay? When you look at this from a 3-day perspective, you're looking at what could possibly be looking for this bounce back up at some level, right? May go deeper first, then your next wave down, okay? This could just be a double top, an ABC type correction. When you zoom out to the 3-day, you zoom into smaller time frames, you start seeing 5-wave patterns. You'll see different patterns develop. But we're going to look at this here on the daily as well. Let's go down to the daily. On the daily, you can see this developing slightly differently. Remember my 3 waves to a bottom, which is also a 5-wave move, right? You have your wave 1, you have your wave 2, and if this bounces back up and retraces at some level, we're going to get that final wave down. Again, my 2 targets that we're looking for, 52.53, 51.25. At some point, you should get some type of bounce unless the market just totally falls apart. Either way, those are my 2 targets I'm looking for, because remember, market facts, market history matter. And what's important about that, we know the last 5 years in a row, your average drawdown in the summer for the summer top and drop is 10.5%. You come down to the 618, you're at 8%. You're not even performing at the average. You come down to the 786, look at that, almost exactly 10.5% at 51.20. Hence, that's my target. GFC, on that retracement, we got 12.5%. Is deeper possible? Sure. But at some level, we're going to bounce. This could be the developing of the bounce here, maybe back test the 50, top here, come back down again, okay? At some level, we'll bounce, but these 2 targets, 52.50, 51.20 is where I think the bottom holds, and we base, and we do this over a period of time here, and then we start to rally up and then get the Fed rate cut, take out the all-time high. Bulls will be super bullish. You guys watching this channel will understand how this ends every single time. I can't stress that enough, because this will be a life-changing trade for some people, or just to be able to build your trading account, because the collapse and even a normal recessionary price target of minus 33% is absolutely mental. So let's look at some of these downside targets here on the futures. So let's look at this. So we have the same exact fib I just showed you, bouncing off the 50% retracement. Let's get rid of this. I lined up my waves here so you guys could see the W, right? Here's your W. And again, on a 3-day chart, you could just be coming up for a lower high for a double top before your next wave down. But let's look at this, 33% down, right? 33% down. And again, we don't have the blow off top yet, but let's just take it from where it is right now, just to get an idea of where 33% down would be. That would take you down to 38.18. However, as you guys know, and you've heard me say many times on this channel, what has the market never done, not once in history, that is hold the low. Every single time your cycle low, which here on S&P futures is 35.02. Every single time in market history with a confluence of a recession, you take out the low, okay? Do you see why we're talking about this being a life-changing trade? You guys have been watching this channel for a couple years. I was telling you on the run up where I think this is going to end back up, right? This is going to end back up in the pandemic lows, and I know that sounds unbelievable. It sounded unbelievable when Bitcoin was above 60K, and I said 10.5, and it went to 15.5, but this is how those market cycles for bubbles play out. And at a minimum, Unless you break market history, you're taking out 3,500. You're at 5,300, okay? So let's just look at this drawdown here from the top of wave 5. And again, this isn't the blow off top. I think that blow off top, we'll cover the top targets in another video, but that blow off top should probably take you up around 6,000, 6,200, somewhere in there. 50% drop just from where you are right now takes you right down to 2817, right in here, okay? Right in these pandemic areas, obviously clearly taking out the low. Just be aware of market history, because until that streak is broken, it is 100% perfect, okay? 100% perfect. You're taking out the low, right? This would be the first time in market history with the recession you didn't take out the low. You're going below 3,500. So mentally prepare for that. Let's go ahead and move forward to the next chart. Let's look at the Dow. Dow through a beautiful 3-wave pattern. You can see the double top here, broke down. Where's it bouncing? Right off the 50, right off the 50%. Retracement 39,568. Again, we could see this try to come back up, back test it, come back down. With the S&P and everything coming to its lower targets, remember the S&P is the mothership market. With the S&P coming to its lower target, I would anticipate the Dow breaking this at some level, coming down to 39 or 38,364. These would be my 2 down level targets for the Dow to come to prior to basing and then rallying back up, making a new all-time high, okay? Those are the markets I'm tracking. If you want to get targets off these markets, then you want to pull your fib here from that second top down and see that the 50% retracement's at 40,004 and the 618 lines up beautifully with this trend line from GFC. 618 at 40,698, okay? Let's go look at the rebound real quick because I skipped over it and somebody's going to ask me. The rebound for this target here for the S&P. The logical rebound, looking at this second peak here, right? The logical rebound, if you come back up, and again, you may come down lower before you come back up, but if you come back up from this level, I'm going to be watching, you want to watch the 50% if it's a weak bounce, 54.66, but really the psychological level you want to watch is this grid right here, right? My kill box grid, 618, 5,500 to 5,550. That's what you want to watch. You also have confluence of the 50. So in other words, if this starts bottoming down here, comes back up, fails, 618, 786, tops out, that's your next wave down to your next target, 52.53 and below, okay? Let's go ahead and move forward. Let's look at the NASDAQ. What did the NASDAQ do? The NASDAQ doubled, 100% gain off its cycle low. Where is that cycle low here? 10,484. What has the market never done? Not once in trading history, market history, it has never held the low with an incoming recession, during the recession, whatever. It's never held the cycle low. So the NASDAQ's at 18.5. At some point in the cycle, you will take out 10.5. And if you don't take out 10.5, it'll be the first time in market history, okay? So again, my 5-wave pattern, I lined it up so you can clearly see the W. You see the sell-off. We can pull our fib from the wave 4 down here up to the wave 5 3-day chart, and you can see you're trying to hold the 618 at 18,591. Could come down lower, could just stop right here at some level. Even on the 3-day chart, you're going to bounce back up. We're going to look at this on the daily, right? You're going to bounce back up, but I think this is coming down further as well. Why? Because the S&P is going to meet that average retracement target of 10.5%. So if the S&P is going to meet that average retracement target and it still has hundreds of points to shed, then you're going to have to look at the NASDAQ going deeper than that, because right now you're in correction territory. You're at 12%, with the S&P has more to move down potentially. And if this moves in confluence with the S&P, normally what it does is it goes deeper and it pumps higher, okay? So I want to look at this at the next level, which is 14%, right at that 17.9 level, to see if that holds right down there at the 786. So again, expecting some type of bounce, and then that bounce to fade, and then the move down to that 17.9. If we look at this on the daily, you can see you fell below your 50 here. Obviously, once again, let's pull a fib from the top here down to your current low. If this was to hold, 50% move takes you back to 19,684. 50% retracement, I should say. So maybe you can bottom up here, attempt this area. What do you have right here? You have the 50 moving average, a 50% retracement. So you want to watch that 19,684, just above it, 19,991. And again, if the market's really weak, you won't get any of that. And you could just do a little blip, a little move up, and then a knife down to the next level. Okay, remember, in the GFC retracement, we fell fast, we fell hard. And last year's retracement in July, things took longer. You fell in 30 days on the S&P, you fell 12.5%, and it took 90 days in the S&P, and I think 99 days here in the NASDAQ last year to retrace this far. So we don't know yet, but this seems to be declining rapidly. So I wouldn't be surprised if this just leveled down. The important thing is, will these levels hold support so you can start to look at a basing process, a buying process in the near future, and then that pump up to the all-time high, and then a sell, okay? That's what we're going to be looking for. Let's go ahead and move forward. Russell, again, we talked about Tom Lee a couple of times. I keep saying his name lately, but again, he's just making these crazy predictions. So back here at the top, he had the Russell going up 40% in 10 weeks. This was about 2 weeks ago, and all we've done since then is go down 10%. So again, you hit the 50, you're at some level, you're going to bounce. Could be a strong bounce, could be a weak bounce. But with the S&P, if the S&P pulls down, everything else will come down with it. Okay, so we're going to look for a bounce, look for a sell, and then where could this possibly go? Well, let's look at some levels here on the Russell. If we look at the Russell from this deepest retracement here and this accumulation pattern, pull this up to the top, I would be looking at these levels right here, which you already hit the 0.5 here at 2118, as you can see, bouncing right off that 50% retracement. The 618 is at 2070, and then the 786 is at 2000. So I think you're going to be somewhere in this zone between the 618 and the 786, right somewhere in here. Again, could bounce up, retest the base of this fractal, fail down here, come back down again. But this is what I'll be looking for a target zone on the Russell. Let's talk about Bitcoin. You guys have heard me say this many times, how I think the market will end for Bitcoin. I've been talking about this pattern in particular, George Lindsay's pattern. This is 3 peaks and a domed house. This pattern, the peaks here are the green triangles. Peak 1, peak 2, peak 3. If you line this up by years, in case you can't see this, 2021's high, November 2021's high after the sell-off, and then this is your third peak right here. The domed house is nothing more than what you would call a head and shoulders pattern, what I would call a 5-wave pattern, okay? But this is a pattern that plays out over and over in marketplaces, and this is what I'm looking at for a finishing of the move. So we've had some really big trades here on Bitcoin if you've been watching this channel. Talked about it briefly before. Shorted up here at 48.2, made many videos on this. Nice 70% decline. What else did I share on YouTube? Just last year in October, go back to October 2023, gave you the diamond pattern breakout trade. This is a 130% gainer, guys, from the trade that I shared on YouTube. And now what we're looking for, again, is our retracement targets. We already hit the 53, just north of it. Our retracement targets, I want to see if 53 holds, or if we come back down to the mid 40s, down to this cluster of candles right here. It does affect the projection. One thing I want to show you that's really interesting, my ABC move, my 100% move here. Let me draw this for you so you can see. If we go to the diamond pattern, this is a 3-day chart, go to the diamond pattern low, come up to your current all-time high, right? Come down to this current low. Again, we don't know if this is the low because, again, I have the mid 40s possibly, but it doesn't matter. I'm going to draw it just from the current low so you can see this. This pattern, this ABC pattern that you see, right? This ABC pattern that you see, the 100% move here is to 102,970. If this is the move that we do, this is how you get your 100K Bitcoin with the blow off top. Been talking about this. Initially, I had a little bit higher target up at 110. Again, it matters what happens here of price. If we come down lower, this price level is going to change. But either way, psychological level, key level, I think it's attainable, but it all depends on the retracements in the broader markets, where they bounce from, and how strong that rebound is with the market conditions that you get these higher level targets. But this is a pattern that I think ultimately is potentially as a fun thought experiment, the 3 peaks in a domed house that could potentially finish Bitcoin off, which is, again, nothing more than a head and shoulders. The same thing you did over here, by the way, in November 2021. You have your left shoulder, you have your head, you have your right shoulder, okay? You have your 3 peaks, and you can end up with a head and shoulders up here in this quadrant, and then you fall back down. So let's go ahead and look at this zoomed in. Zoomed in here. Well, actually, it's the same chart. It's a 3-day chart, but we'll go ahead and zoom this in some. So looking at this, we have, if you look at this from this perspective of just simply pulling your fib here on a projection, right? Why is the projection important? Because when we look at the fib projections, this is how I was able to get this top up here. We look at our diamond pattern high, down to that cycle low, the 15.5, right? Look at right where we hit up here on the 200%. See this blue line? 48,196 gave you the peak for this next accumulation area. That's interesting, right? Well, that's just something you notice with Fibonacci and proportional moves. But now if we take that accumulation peak, pull it down to the diamond pattern low, right? View this as legs, what we just did here, right? Leg 1, leg 2. Where did we top out perfectly to? Perfectly, like to the dollar. 73K 765, right at the 200% retracement move. So this is something I've been tracking because of the proportional 200% moves on projections. And now if you do that same projection that we just did twice in a row, and we do it from the all-time high and pull it down to this previous accumulation range and look at where these levels get to, you see the 1618 at 95. But again, the fib that has been hit twice in a row based off these fib projections was the 200% fib. And again, this is how I got that 109 target. So that 100K 109 target, if Bitcoin does what it's done on the previous two legs, expand to the 200% move, right? Now we could hit these lower level targets, 83, 95. We'll look at that when the time comes. My current focus is on where this retracement is going to. If we're going to hold 53 or come down to the mid 40s, it matters as far as how far you're stretching the rubber band and how much upside you can get, okay? So we're going to be watching that closely. Let me go ahead and zoom in here on the daily real quick before we switch over to the other assets, the other charts. What you want to look at here, again, you have this move, you have your wave 1, you have your wave 2, this is your rebound back up. Could you just be bottoming here and coming back up? You could be, and then you could be getting a wave 3 like this, okay? Or you're holding this base, and this is going to be your bottom for your W. It all depends on how quickly the other markets can surrender, okay? If they just start suddenly falling and Bitcoin holds up above the 53, it's doing really well. If it can't hold up above the 53, then that's bad, and I think you're going to come down to the mid 40 levels, okay? So that's what we're going to be watching, is these patterns as they play out, as they form. If the markets can bottom and start to rally, look for Bitcoin to try to do this move. And if this move here fails right at the 618, 786, just like I trade the equity markets, then you want to be watching this. If this is the current bottom here, watch this up here at the 66, 67, 68K range. If it fails back up here again, this is what you could be doing, right? Just another type of a double top type move for that next wave, right? So we're going to watch the area here that you're holding and watch the area where you could bounce up to. You can also just take a fib here from your 53, come up to that third peak here. See that you're bouncing right off the 618 at 59,730. You come down deeper, you're at the 786 at 56. Again, important areas to hold, because if you don't hold it, even if you get a weak bounce and then a next wave down, that next wave, it's all going to come down to, can you break the 53 and descend down here into the 40s? Because you have a big air gap here, right? You got a big air gap. This is your mid 40 range. We'll see how Bitcoin reacts with the markets as they sell off. Let's look at Solana. Solana, we've had some big trades on the Discord, 60% bagged a 60% winner on Solana, but you've been struggling right up here at the 786, 786, stark sell-off, right? So you see this over and over. The cryptos, a lot of the patterns look very similar, as those of you that know that trade the cryptos. So we'll look at this Solana. We'll pull this up. Let's go over here. Let's look at our retracements on Solana. I'm going to go over here to that January 23rd candle, come up to your high here. And you can see this on the retracements. Where are you trying to hold? The 618. The 618 at 129. You just fell below the 50% at 144. Price is 142. Again, at some level, you're going to bounce, right? You just always do. I mean, it's just how markets work. Strong sell-off at some level, you're going to bounce back up. But we'll see. If the 618's at 129, if you come down here, maybe this is where you get a bounce, right? And you try to put in your bottom down here, just like you did over here. So be watching this as well. Where could it go in a stronger sell-off? Then you're looking at 107, guys. So you need to see if 129 can hold. You're at 142. If that fails, then you're looking at a stronger sell-off to 107, putting you back in the cluster of these candles over here. So move forward, looking at Ethereum, similar concept, guys, looking at the fib retracement, you're trying to hold the 618 at 2841. If Bitcoin can stay up, then you could see this level hold. As you can see, it's been holding for some time now, quite a few months now. It's been holding, but again, if Bitcoin drops, then watch this drop. Your next key level down is 2,500. You're at 2911 right now. Could you bounce up and come down? You could. So we'll be watching this. The cryptos are trying to hold support. Some are holding like Ethereum, others are falling through support. So you want to watch these levels. But in general, my overall view is Bitcoin's going to correct while the markets are correcting. Bitcoin may lead out, right? It may break out first. The markets may still be going down, but until the markets finish their correction or on the process of getting down to the bottom of the correction, I think Bitcoin's going to be hovering, trying to hold support, maybe a slow grind down, but it all comes down to Bitcoin holding that 53K or going down into the mid 40s. And if it does go down into the mid 40s, again, making a new low, I think everything else is coming down with it in the crypto space. Okay. We'll go ahead and move forward to gold. Gold was up here at its all-time high, even though people will tell you gold doesn't care what the markets do. Didn't sell off a lot, but it did sell off. It was at 24.77, came back down to 24.42. Again, the market structure I'm looking at here is this three-wave double top. You want to make sure these levels beneath you here you can hold. You bounce off the 50% retracement. You want to stay above that. Stay above 2,400. That's the 618. If you start drifting down this way, right? Drifting down this way, you really need to hold 23.53. If you don't, then you're breaking that support structure of this double top, right? You're breaking this double top down, and then you're coming down to these lower level targets, 23, 22.76. I don't see that right now because gold was barely affected in that big sell-off. It was affected, but it was barely affected, but just something to watch, okay? To break out to new all-time highs, then you need to get above 24.83. If you look at silver, again, super long accumulation pattern. I showed you this in a 3-week chart, right? This is a 3-week chart here on silver. Look how long this accumulation pattern is. You're really struggling at that $29, $30 level. I guess you could say it's a psychological level as well. Zoomed out from this perspective, you want to see silver get above 30 and stay above 30. But given what's going on in the markets, again, it's not that silver's bad or silver's good. It's that if markets do sell off, you could see selling pressure in metals just because people have to take profits and things they've made money in. But you want to watch this level right here, that $29, $30 level, and they get really bullish on silver, you got to get back above 31, okay? Or 32.50, I should say. Get above 32.50, you're breaking out. But you got to get above 30, challenge that 32.50, watch the selling in silver, watch the selling in gold as the corrections play out. Hopefully they can hold up. If not, then watch for silver to come back down into this trading range that has been in, which is the mid and high 20s in this range, okay? Let's go ahead and move forward. Let's look at a couple individual assets. Apple. People ask me where I think Apple's going. I think Apple's going to retrace with the markets down to possibly 200, 50% retracement. And if it goes really south, then I'm looking at 192 at the 618. So you can see Apple's just struggling right now, right? It try to rebound. We'll see if this comes up a little bit more on a bounce. And then if it does it top out? And then do you break down, taking out that fractal? But if the S&P plays out in its retracement that I think it's going to play out, and then I'm looking at 192 Apple, 200 Apple, again, would be looking for a basing process, right? As we progress through the month of August, going into September, all the hype machine starts about the rate cut. Got to put new money to work. This is the time to buy. You got Apple. You got Apple at, 10% off. You got to get Apple, 20% off, wherever it was at the high. You got to get Apple. This is the time to buy it. You'll see the same type of noise on NVIDIA as well. And this is how markets move in waves, right? So you'll get the sales pitch. We'll get the bottom, the best time ever. This is a correction. We all knew we were going to correct sometime. Everybody buy it. And this is how you can bounce back up. But look for Apple to come down to 200. See if it can hold it. If not, then look at 192 at the 618. And again, if it has some type of idiosyncratic story where it goes really south, then you just be looking lower here at 179. But we'll see. If we look at NVIDIA, this is exactly what I'm talking about. NVIDIA is at 100 right now at the 618. Bounced off the 100. It's at 107. But again, this is a stock that was just recently right up here at 140, okay? So again, you're going to bounce at some level when the indices bounce, right? So you're going to bounce at some level. The indices are nothing more than made up of all the stocks that they contain, right? So you're going to see some type of bounce. Where do I think this is ultimately going? With the continued sell-off after the rebounds, right? With the continued sell-off, I think you're ultimately going to come down and test this structure down here. So the 618 is already at 100, and if you still have hundreds of points left to go and hundreds of points left on the NASDAQ, you've had a big sell-off, but you want to see if you can hold 100. If not, then you want to watch 89, right? Want to watch 89 down here, mid-80s, high 80s. See if NVIDIA can hold up, or if it does this type of move and just starts coming back down, then it might put in its base down here, and that's your NVIDIA trade, okay? So we're going to watch this as it plays out. Guys, I go over all of this stuff on our Discord as well. So if you want to check out our Discord, I do my market update videos there all the time. I do them every single week, as well as our staff. Okay, so let's go ahead and look at Tesla real quick, wrap this one up. Tesla, looking at our fractals here, where did Tesla fail? Right at the fractal high, right? You see this? Failed right at the fractal high. Tesla sold off. It got above 265, came all the way down to 207, touched the 205 here. Tesla's going to be playing out very similarly. If we look at Tesla from this pull up on a fib, up to that current range high right here, bouncing right off the 618 at 206.98. If Tesla can't hold 206.98, and again, this may play out in a bouncing fashion like this, I think it's coming down to the 189, right in this level, retesting this big, larger structure in this range, okay? If it can hold it, great, but if not, then it's coming down. And again, when we move after the retracement's over, look for the beta stocks like Tesla to potentially have some big gains, especially if they sell off a lot. You know why? Because they'll view it as value. Oh my God, Tesla's back at 189 or Tesla's back at 167. And look, the market's going back up. Maybe it is a soft landing, and then everybody will pile in and these things can skyrocket, right? It's how you get these beta moves, beta plays. Guys, hope you enjoyed the video. Post any hurricane issues. If it doesn't take out the power, knock down trees on the house for the second time, then I'll have another video out for you on Wednesday, okay? So again, check out our Discord if you want. Message Lee if any questions, and I answer your questions in the comments as always. Take care, everybody.